You were listening to chartingwealth.com for Friday the 13th of May, 2016. Friday the 13th. I hope that is not a bad thing for us. What do we have going on? Well, the market, we always start with IYY, which is an exchange traded fund that tracks the total market. What do we see going on here? Well, we see a crossover going down back on the 28th of April. The market has been going down since then. It was actually on our 2-day chart we saw that crossover. Went down heavily for the first 3 days following that. The next 2-day candles, 3 of them, it went down on the 2nd, the 4th, and the 6th of May. Then the market swung sideways since then. Now, it was down technically over the course of Thursday, 0.08%. That's not a lot down. However, the kind of Hinkin-Ashi charts that we use are average pace candlesticks. That's different than what most people are used to. We like them because they really help us identify trends and changes in trends a whole lot quicker. We do see that the MACD is continuing to diverge. That is the distance between the signal line and the MACD, the moving average convergence divergence indicator. Plus, our derivative oscillator has continued to heat up. It's continued to get longer. So we have broken our 2-day trend line. We're going to have to at some point redraw that. We do not have a closed red box. We actually have an open red box with wicks on top and the bottom, what we would call a spinning top, which means lots of indecision in the market. After the green 2-day candle from the 10th, we now have closed a 2-day open red spinning top candle, which again means mostly indecision. Down movement along with up movement and an open box. So we are really relying primarily on our indicators, which are down at this point. Now, if we go to our intraday chart, which is our 4-hour, that's 2 half-day charts. When we look at that intraday, what do we see? Well, again, our candlesticks show us in the afternoon on the prior day, on the 11th, you saw down movement. When the market opened on Thursday morning, down movement in the afternoon. We still don't have that crossover going down on the 4-hour chart that we're looking for. That's going to be our entry point into a downward move or an inverse fund purchase, but we're waiting for that. We see the derivative oscillator continuing to lose energy, and we do see the distance between the MACD and the signal line narrowing. We're waiting. May happen on Friday. We want to see a confirmed down move on that short chart before we look to getting into anything. Now let's look at our 2-day chart on the S&P 500. That was technically up 0.03% for the day. We don't have a red spinning top. We have a green spinning top. Again, what is the difference? Well, technically for the day on Thursday, the S&P 500 was up 0.3%. That's not what I'd call much of an up move, but technically it is. Derivative oscillator, however, continued to lose energy. And the MACD and the signal line diverged even further, which is a sign that the market is continuing to go down. Now let's look at the intraday chart. What do we see? Looks very similar to the total market. We have 3 red down candles actually showing us that we have a downtrend continuing. We don't have that crossover yet. We do have the derivative oscillator on the shorter chart losing energy. So again, until we have a crossover, we would not look to purchase, again, in a virtual trade, SN as in Sierra Nevada. What happens when you have down movement on an inverse fund like SN? It tracks. In fact, you can, I'm sorry, not SN, forgive me, Sierra Hotel. That is the ProShares. We can show you that again. That is the ProShares short S&P 500 exchange traded fund. What does it do? Well, it moves converse to the S&P 500. When the S&P 500 is going down, it's going up. So you can purchase that when the market's rolling over and going down as your virtual trade. Again, so that you can practice and see if you can actually make this stuff work. Remember, we're not a stock calling service. we are an education firm. We want you to learn how to read charts, and then you can make all the trading decisions on your own when you feel confident and competent in order to do that. We don't give you trading advice. Specifically, we do not. Okay, now let's go to the Qs. What's the Qs? That's the NASDAQ 100. What do we see on that 2-day chart? Well, again, we see a red spinning top like we saw in the total market. We have breached the 2-day trend line after about 5 strong down candles. That happened back on the 10th of May. We've slid sideways since in, a red spinning top, lots of indecision, confirmed down, a widening between the MACD and the signal line. Derivative oscillator, however, has lost a little bit of its energy, so that's something to pay attention to. Let's look at what happened intraday. We see on the 4-hour chart that we had down movement in the morning and the afternoon. Derivative oscillators lost a lot of its energy, and we still don't have a crossover yet going down, so we don't have a confirmed point to start looking to get in. But pay attention on all of these charts on Friday. See if you get some confirmation and can actually get into a down play where the short chart crosses over and then, of course, goes back to paralleling the down movement in the big chart, which is still in a confirmed down move. Now, lastly, going to go look at gold. Gold was down 0.77% for the day. We see a doji on the 2-day chart, means lots of indecision. Gold looks like it's trying to cross over going down, has not done that yet. Derivative oscillator still in the positive, and we don't have a confirmed crossover going down yet on the 2-day chart. If we look at the 4-hour chart, what do we see in gold? We see it continuing to slip sideways. We had a little bit of down movement in the morning. The majority of the down movement, it appears from our Hinkin-Ashi, was in the afternoon, still losing actually energy on the down move. So it's gaining energy for an up move if you just looked at the derivative oscillator. But you do see just pretty much paralleling the MACD and the signal line haven't moved closer or farther apart. They have continued to both move down though. So again, just continue to watch gold. We don't have any confirmed actions to take in gold at all at this point. That is where we ended the day on Thursday the 12th as we go into Friday the 13th. Again, continue to pay attention. Continue to study, continue to learn, continue to be excited about the markets. I'm telling you, when you have charts that you can rely on, when you start seeing these trades set up and you see them being pinged and you jump into these virtual trades and you make it work, there is nothing that feels better than being able to tell yourself, I told you so. It worked. So continue to stay with us. We'd love to hear from you. Go to the website. You can email us from there. You can always talk to us on Facebook, Twitter, Instagram, YouTube. We love to hear from you. If you want to help us out, one thing we ask you to do, go to iTunes. Give us a 5-star rating. Say something nice about us. We so appreciate you. Hope you appreciate us. We're here to help. Let us know what we can do at chartingwealth.com.